Welcome back to another one of my videos, and in today's video we're going to be answering the question which is actually been submitted by one of you guys, which is, hey Ash, could you do a video about what does the average case size look like, mortgage and protection, and what you can earn from each of these, both employed and self-employed? Absolutely happy to break that one down. I think that it obviously when I break this down in this video, it's not going to be exact because everybody is different, every situation. So I'm going to give you like an average case side of what that would look like with some of the people I've worked with. Before we go any further though, be sure to subscribe to the YouTube channel. If you're a mortgage broker, you want to level up your business, you want to increase your impact and income and simplify success, I share tons of content all about how you can do that, whether you're starting out in the industry or you're a seasoned pro. So please do subscribe. So let's dive into this and to literally unpack this whole thing, and I can do a bit of a whiteboard session with it as well. So let's see how we go. So the mortgage commission, the whole mortgage package that you get paid on, is broken up into different parts. Okay, so they're broken up into, normally when we look at a mortgage case, it's going to be 2 to 3 parts, and there could be more if you've got additional income on top of that, but it's going to be 2 to 3 main parts that you're going to be focusing on throughout this. Okay, so the first part we're going to look at is called the proc fee. This is the proc fee. Effectively, this is the fee that the lender pays you as the broker. So this is the fee they're going to pay you in order to actually have done the mortgage. That's the whole concept of a proc fee. Now, when it comes to a proc fee, let's do some numbers here quickly. If it comes to a proc fee, the proc fee is usually going to be around 0.3% of the loan. Okay. So it's normally be about 0.3% of the loan is a standard proc. Now this can range from about 0.3 to 0.45, 0.5. When I was a broker, it was actually around 0.4, but it has come down to about 0.35. So just for argument's sake, erring on the side of caution, we're going to use a 0.3 for this calculation, but it could be a little bit higher. Haven't seen any below 0.3 apart from if you're doing product transfers and PTs, really. Product transfers, they normally half the amount. So just so you know that. Now, let's dive into this. Now again, maths with this could be pretty bad. I might be doing these off air before actually in between, but I'm a dyslexic, so this is going to be fun. So if we take an average loan of, say, a loan of 150,000, so let's say the loan is 150,000, and that would mean that your proc is going to be around £450. So on a mortgage of around 150,000, you're going to get a proc of around £450. Again, that might go up depending on that, like up to about maybe 550, 600, depending on the lender you choose. But your proc is going to be around £450. So that's the first part of the income made. So we've got proculation fee. That's the fee of the lender. Again, remember, if this was higher, if you were part of a bigger, larger mortgage, that's going to be higher. It's smaller mortgage, that's going to be smaller. That's just important to point out. Which leads me to the second part of the fee. And that second part of the fee is insurance commission. Now, what happens with insurance commission is you are paid a commission from the insurance companies for providing advice. Now, when it comes to insurance commission, this one is a bit of a strange one. So if we look at insurance, normally so let's do protection. Always love it because people call it protection, insurance. It's a funny one. So let's look at protection commission. So protection com. What I would say with this is normally you're going to look at anywhere between, and this really ranges, anywhere between 18 times to 24 times monthly premium. My dyslexia cannot deal with that. So it's fine. So what do we mean by this, the monthly premium and the 18 times and stuff like that? What I mean by this is that, let's say, and I'll bring my phone up on here. So let's say that you had you sold a policy, an insurance policy for £50 a month on a life insurance, critical illness cover, whatever it may be. Then you would be looking at 18 times to 24 times that. So let's times 50 and do times that by 18. And that's going to give you a commission of around £900. That would be up front. That would be paid up front if you were to take that roughly. So let's just put that here. So that would be if you were doing a £50 PM policy, that would give you around £900 commission on that. As you can see here, by the way, where the real money comes is in this. So this is where you're going to make the real money. This is where, like, I've got some advisors, just to put this in context, I've got some advisors, specifically actually a couple of weeks ago, my advisor just did a £450 a month policy just on one client. So if you take that, and he actually got that on a 24 month because of the way his business set up, and I'll explain that in a minute. So if you think that times 24, he made £10,800 of a one commission sale. One commission sale, £10,800. He is doing quite a few of those a month. Not at that high, that's pretty high. 450 is very high, to be fair. But he's doing regularly 150, 250, and you can see how those things would stack. If you do 150 straight away, you would think if you get your averages, 50 is pretty low. If you got your average to 150 and you're doing it just on 20, you're still doing £3,000 a case. Okay, so you're still getting £3,000 a case on top of any proc fee and anything else you're including in that. So you can see how the average case size we're talking about in this video, the average case size really does start to scale if you're willing to get good insurance. If you're not willing to get good insurance, you'll be broke. Okay, it's really important to point that out. Now, when it comes to insurance, we've got this £900 there. Insurance is broken up weirdly, that you can, just to point out how insurance income is taken, insurance income can be taken up front, which means that you would get all of that, and then that might be on a clawback period, meaning that if someone cancels that policy, if someone cancels the policy at any time within a 2 or 4 year period, depending on the product you're on, they will take the percentage of that commission back from you. So it's effectively a loan. You get loaned that commission. This is why it's high risk, high reward. But if someone cancels that policy, you don't get that money. You don't get to keep that money. You've got to give it back. You can also, though, take it on what is referred to, and it's called non-indemnity and indemnity. I always get the two confused, but we call it in the industry on the drip or up front. If you take it up front, you're going to be close to that 18 times income multiple. If you take it on the drip, which means that you get paid monthly for 4 years, then you're going to be close to that 24 times income multiple. Now, and this could be higher potentially if you've got something. Normally it's going to be around 24, but you'll get a little bit more. And actually over a lot of cases, this stacks up. So you get paid an income then every single month for 4 years. So there's no risk then. If someone cancels, they just stop paying you. So there's no risk there, but there's no upfront payment. The reason why people do different ones, but the reason why on the drip one, where they pay you every month, can be very good, is you can start to build up, if you're self-employed, you can start to build up some serious cash flow. Because if you do it for 4 years, again, I've got a client of mine who we've been working on this, and I think next year, if he continues doing what he's doing, next year he will make about £288,000 a year without doing anything. So because every month he'll just wake up, every year effectively he will get paid £288,000 a year without putting any more insurance business in or without doing any more mortgages. And obviously that will then trail off. If you didn't do anything over every year, that would get lower and lower because it's not indefinite, but you still have trail commission on it. But that's one of the ways you can do it. But for this reference, I'm just going to point that out. But for this example, we're going to go off this 900. Okay, so if we're going on our 450 and 900, then that leads us on to the final one we need to do. And the final, and then I'll explain self-employed and employed as well. But the final one we have, really the main bulk of your income, is going to come from what we call in the industry broker fees. Now, a broker fee, this one is a touchy subject. Many people charge broker fees. Lots of people don't as well. If you charge a broker fee, the average broker fee really should be starting at around $495 minimum, really, for you to make it any value. So if you think your broker fee is going to be, let's say with that, write that down here. So we've got our numbers. So we've got our broker fee, 5. Now, with the broker fees, that is, like I said, that's going to be your discretion, really, or your employer's discretion, depending on how it works. And that income, some people don't charge them, some people do. My advice on that is you should charge them. If you don't charge them, especially if you're starting out right now, by the way, don't get caught up in a no charging environment. You're not going to make much money if you don't, unless you're really good at selling insurance. And also broker fees, you deserve to be paid for your advice. It's hard work. It's not a simple thing to be a broker. And I think that people should be paying for advice. So you miss a massive chunk. If you look at that, potentially, if you're doing like 100 to 150 grand mortgage, which is common, then you will make more from your fee. And the fee is what you get paid up front. So that's pretty vital to make that that kind of differentiating thing. So that broker fee is the other one. So then let's have a look. If we keep going, and let's actually, like you said, let's total this bad boy up. Let's actually total it. So I've got it on there. So if I'm thinking about the total of what that would be, this is where I'm absolutely rubbish at maths. So if we total this up, it shouldn't be too hard, to be fair. So if we do total, we've got for the proc, we have 450 roughly on that. We've got the insurance, so com, which is commission, we would have 900, and then for the fee we would have 495. Which would bring us to a total of £1,845. That would be, in my opinion, that would be an average case size. £1,845 would be an average case size for a standard broker. Okay, so that would be the total, and let's bring it up before we dive into self-employed and employed and the different models. That would be the total gross amount of an average case size. Now, realistically, that would be a normal, I think anywhere you could geographically put that, any location, you'd make between 50 to 1,800 a case. Now, if you go down into London and things like that's going to go significantly higher. If you've got houses where the mortgages are 500,000 for a mortgage, you're going to be starting getting 1,000, 2,000 proc fee. And if you're going into the millies, then the millions, you are looking at thousands and thousands of pounds of proc fees. So it really does depend on that. But the average mortgage broker isn't dealing with those cases. And so the average mortgage broker is going to get that normal range that I'm talking about here. So that's just hopefully gives you an idea of what that works. Now let's talk about the self-employed version first. So if we're going to talk a little bit about how self-employed brokers would get paid with this, because you don't get 100% of it. And again, I'm not going to factor in all of the actual the actual income and what it is, because my maths brain is fried by this point. But with a self-employed person, normally if you're going to be self-employed, you're going to get anywhere from 50% of that total commission. If you're working under certain people, normally a 50-50 split is the baseline, depending on if you're working under a firm or not. And so 50% of that, so you could be getting 50% of that total commission, all the way up to about 85% of total commission, normally, of the whole thing, total package. Some lenders, some broker networks, and some companies will not take any of your broker fee. So you might get 100% of your broker fee and then 85% of the rest, or 50% of the rest. Some won't. Okay, so when you look at that yourself, you're never in any circumstance, even if you go DA, going to make 100% of the case. Even at DA, you probably can be giving up 5% for your mortgage clubs and things like that. So you're always going to make a higher percentage of that. But like I said, self-employed, you're going to make anywhere from 50 to kind of 85, 90% of that case, depending on your situation. Now, when it comes to the other one, which is employed, when it comes to being employed, this is an entirely different thing, and all bets are off with this. So I can speak to different employed versions I've had with this. So for me, when I was at Connells, and within that, we would get, like I've broken this down already in my experience. If you want to watch my video, I'll link it at the end of this video about my experience working at Connells and how that worked. But I would get a percentage, a smaller percent. I get a basic salary and then I get a small percentage. And it started, I think, at 10% or 12% roughly of the whole total case. And that would be of whatever I've written. So you would get less. Of course, you get less. It's an employed role. That would make sense. So you can get anywhere with employed roles. You're probably looking at in general. And then when I went to an independent financial planning firm, I would get 25% of whatever I wrote after. I get 25% of anything I wrote after I had banked my basic salary. So I had to bank my basic salary, which was, I think, 30,000 at the time. And I have to bank my basic, and then everything I'd have to, as in that month. So if I was going to do my basic, then it would be 30,000. I'd have to bank £2,500 every single month. And then once I'd banked that in commission, everything else, I think it was more than, I think it may have been about 40%, to be fair. No, it wasn't that high. It was like 25%. So I'd then make 25% of anything else I banked on top of that. So if I banked then, if I was writing, say, 15 grand a month, then I'd have the first 2,500 was gone, and then the other 12,500 I'd get at 25% of that. And so it would then stack. Yeah, it definitely wasn't higher than 25. And then that would be how it would work. Yeah, because the self-employeds were 50%. So it was 20, there was a risk. I was trying to think out what that was. And so there are different models. Some people, by the way, will pay you a basic salary and no commission. Some people will pay you a basic salary and then bonus schemes where you just get like targets and it's nothing to do with the commission you write. So it really comes down to the place. I can't speak to all of them, but you're going to get roughly around that. So that's the video. There's nothing really else to consider with there. This is how the average case size would be. One thing I would point out is that the cases are going to be smaller and larger depending on geographic location and also to your ability. If you're really good at selling insurance, you could quite easily get a very high case size. Once I got good at mortgages, my average case size was around 4,500. So you can do that. You can definitely get it. Once I got good at mortgages and insurance and stuff, that my average case size was about 4.5. It wasn't that at the beginning, but it got to that point. I think most brokers can get to a 4,500 anywhere in their geographic location if they get good at selling insurance and they have good, reasonable priced fees for their service. Absolutely fine. So that's my take. Now, if you want to, and you're interested in learning about, like I said, my experience at Connells, because I talk about that. Some people are interested in this and how that actually worked, the whole training system and everything that went through it. Check out this video on screen here. I break down what it was like going through Connells, the commission structures, trainee salaries to coming back in, everything that I had my own experience. It might be different now, but it's definitely something that you might want to watch. So check it out.